Good morning, wealth creation investors and traders. Matthew Buckley, the chief investment strategist here at WCI. And the market melt up continues. Actually, it's not going to be a melt up today. It's going to be a rip your face off rally. Why? Well, we had the all-important non-farm payroll numbers this morning and the unemployment rate. Non-farm payrolls were supposed to come in around $1.46. They came in at 165. So a great jobs number today. And, of course, the 88,000 that we saw for March revised up to 138,000. So, first of all, that big of a miss, 88 grand, and then this revision up, does that give you any confidence in these jobs numbers? Of course it doesn't. These people are throwing darts with these birth and death rates and seasonality, and plus this, we carry the square root of pi. So, but here's the headline number for today, guys, is 7.5%. The unemployment rate went down from 7.6 to 7.5%. Now, we know the last time we saw these numbers, they went down from 7.7 to 7.6, and the market paused for a second and then kept going up. But those were bad numbers, right? They went down from 7.7 to 7.6 because 600,000 people left the workforce. That's bad. 600,000 people jumped in their parents' basement onto the couch and are eating Cheetos because they can't find work. Now, this relatively good number, down to 7.5, should be bad news for the market. Why? Mr. Bernanke, on Friday, has repeated that, hey, once unemployment starts looking good, gets down around 6.5%, we're done. We're going to call last call, and the drunks on Wall Street I'm going to throw out of the bar, and they're going to need to fend for themselves. So technically, a good jobs number should be kind of bad news for the market. That would be in the real world. We're in bizarro market, where the potential of the Fed leaving this market sends the market going up. And here's why, guys. The market's rallying like we're seeing today. Dow's approaching 15,000, and the SPX is above 1,600. We are at record all-time highs on the 1,600. You feel good? You feel like everything's great in the economy? Retail sales, consumer spending, industrial production, Chicago PMI. No. We are seeing some of the biggest macroeconomic data misses in the past 5 months than I can in recent memory. We're missing on all the important economic data, and the market keeps going higher. The market knows that the Fed is not going to come out anytime soon and say, okay, that's it, everybody out of the pool, we're done with easing. They're not that stupid. He does that, the Fed does that, and this is what happens. The financial tsunami we saw is going to look pleasant compared to what is going to happen if the Fed just walks out one day and ends easing. The Dow would be cut in half and the S&P would be down at 700 easily. It's not going to happen. The Fed's not going to do it. Bank of Japan, Bank of England, the Fed, the ECB, Mario Draghi the other day cutting rates. This is just, we are all flying formation and a suicide mission into the side of a mountain, printing money to try and get out of our economic mess, right? But here's the deal, folks, is I don't care. I weep for our country and what's going to happen, but I don't care because I'm going to be ready for it when the music stops. I'm going to have a chair, and more importantly, I'm going to hold my nose and trade the shit out of this market. What's that mean? Japan. I know the economy in Japan sucks. They had a tsunami, devastation, right? Nuclear problems, their economy stinks, but the Bank of Japan says, well, I'm going to pop open the trunk of my Toyota and print yen like you're doing to the dollar, Bernanke. But look at this trade, $3,700 profit. $3,700 profit in 3 weeks. That's a 220% gain on what? The EWJ. Yeah, Whiz, that's a really great trade. I know it is. Why? Because even though I know everything under here is crap, this right triangle here, it's built on nothing but yen. But I know the Bank of Japan printing $1.4 trillion US dollars is going to cause their market to go up. This is a layup trade, folks, just like the U.S. market. It's not going to go down. If Cyprus, potential contagion out of Cyprus spreading throughout Europe, if North Korea, if Syria having chemical weapons, if European unemployment rate for those under 25 years old is near 50%, who cares? Nobody cares. You know who cares? The people who are living under that. The non-one percenters in the United States. So the main reason Bernanke's got a smile on his face right now is this. This is called the wealth effect. The market going up like this has made people make a killing in stocks, right? You're making a killing. Of course you're not. There's a sliver of a dividing by fractions number of Americans who are participating in this, quote, rally. And just about the time they're going to feel comfortable to jump in the pool, they're going to pull the plug. You're going to do a backflip into the deep end and break your neck. So while America is hurting, jobs are sparse, industrial production is slowing, retail sales, hourly wages are going down, workers are being worked even harder, companies aren't hiring, the stock market keeps going up. I call it hopium. Just take a big old drag on your hopium and watch the market go up, or get on board. But if you get on board, know that you need to have a chair, you need to have an ejection seat, because the reckoning is coming. So if you really shouldn't be trading this market solo. So here's what I recommend you do. A good buddy of mine, his name is Mark Longo. He founded a company called the Options Insider up there in Chicago. Worked with Mark before. I had him on the Options News Network a couple times as a guest. Great website, the Options Insider. He gets together about a bunch of 500-pound heads in the options industry, and they put out great information from on high, from the mountain. Well, here's what he's doing. He's actually doing a live event up in the SIBO. So this is pretty cool. If you really want to get a peek behind the curtains and see how the Wizard of Oz gets stuff done, I strongly recommend you sign up for this event. If you're in the Midwest, or even based on airline tickets today, you can get up, hop on Spirit or Southwest or whatever into Midway for a really cheap ticket, because it's going to be worth it. But if you live in the Midwest, definitely go to this event. For only $99, you're going to get a tour of the SIBO. You get a month free into a bunch of his options newsletters, his options alert services, a free month of Live Vol Pro. Live Vol, great company, great technology. The Options Traders Hedge Fund, a free month of Option Pit Live. It feeds you the best actionable options trading content on the web, and you get a free month of Market Taker coaching. And the pros over at Market Taker will be providing that. So this is I think I might even, I got to check my schedule. I'm probably going to head up for this as well. But Mark Longo speaking, Dan Passarelli, he's the founder of Market Taker. Dan worked with me as a trader at the Options News Network. Great guy. Mark Sebastian, Henry Schwartz, and Matt Amberson, and Stephen Chow, the co-founder and COO of Live Volo, and he was a member of the PCoast, the Pacific Exchange. It's Wednesday, May 15th, and it's at 2 p.m. at the SIBO, the Chicago Board Options Exchange. Very familiar with that address, 400 South LaSalle Street, right at LaSalle and Jackson, the intersection there. Going to have some cocktails, going to have some hors d'oeuvres. Action-packed day, folks, for just under $100. That's not even covering the cost of anything. It's this is an incredible deal. I strongly recommend you do this. Mark Longo, again, 500-pound head in the options industry, puts these events on very rarely, and when he does, I pound the table and recommend WCI and Top Gun options traders that are in that area to go. It is not to be missed. Okay? All right, I got to get going because I got a lot of trading to do. AIG, again, is popping today. Look at these two diagonals we have in the primary model portfolio on AIG, up nearly $10,000 in a couple months here. Long-term bullish diagonals on AIG. This one's up nearly $7,000. This one's up $2,500, and I just put this one on a couple weeks ago. This another AIG long call diagonal. Put this one on a couple months ago, maybe 6 months ago. So we're averaging about $1,000 a month in our AIG diagonals. Just having a great day in the market, and like I said, the synthetic stock position on Japan is $3,700 in 3 weeks. Great stuff going on. Put this Apple bull put spread on Tuesday morning in my primary live trade brief. It's already up $1,200. So good stuff going on in our model portfolio. Very happy with what's going on. Welcome aboard to all our new primary traders that joined us yesterday after our 2 live trading sessions. If you didn't join with our incredible offer yesterday, make sure you check your email inbox and check it out. Okay, got to run. Make sure you sign up for Mark's event up there in Chicago. The video will redirect to a page, and also the link will be in the email that you're looking at right now. Okay, got to run. Happy hunting. Make sure you hedge. Have a great weekend, and I'll see you all Monday morning with our Monday Market Outlook.